We're having another busy week for new issuances for IPOs and direct listings this week. I want to take note of that. We've got nearly a dozen new listings coming, including direct listings from Palantir, which is a data management firm, and from Asana, which is coming out this week. They're a work management platform. Kim, I'm wondering if you can comment on this. The IPO ETF is at a historic high today. It's up 68% so far year to date. It's got finally attracted 200 million in assets under management, which is a pretty nice threshold to pass. It's taken several years to do that. What's behind all of the sudden IPO rush?
Yeah, Bob, I think it's the push for where the puck is moving for leading edge technologies and disruptive technologies. Obviously, Airbnb and DoorDash. I look at my father, who's 83 years old, and he did not know what a DoorDash was before this virus, and now all of a sudden he's one of their biggest proponents. So it's clearly where the puck is going. I think what's interesting too is there's still a huge pipeline of these deals here. 491 unicorns with $1.5 trillion in aggregate market cap, so an average of $3 billion. That's a lot of deals that are teed up. And as you mentioned, these direct listings like Palantir. One thing I will mention on Palantir is if you look back 6 years ago, Bob, when they did a round of financing that was probably at about an $8 billion range or level at that point, because it's taken them so long to come out public now, in the ensuing 6 years, there's been about 28% dilution that's happened during that time. So there's now going to be 1.9 billion shares outstanding instead of the 1.5 billion. But still, where these things are going, one other thing that I would just mention, too, is, again, you had 900 IPOs in 1999 and 2000. If we get to 170, then last year and this year combined are only about 1/3, a little over 300. So there's still a very robust appetite, and given what's going on, there's still a lot more that can happen.
Right. Tim, let me bring you in here. We're talking about the spate of IPOs. But one thing that's quite amazing to me is how the ETF business has been able to capitalize on whatever trend is happening. We already have work from home ETFs that are out there. They seem to capture. It's a perfect vehicle for capturing the zeitgeist. You can call it whatever you want to call it, investing by trend, if you want to. I've heard some people say that. But it really is quite amazing. And you can see how some of these names like Zoom, Moderna, Peloton, CrowdStrike, they're in a lot of these ETFs that are out there that are on disruptive technology. So they're beneficiaries of in a way, in a perverse way, of the whole COVID movement. And the ETF business has benefited from this. And again, it's rather perverse, but that seems to be the case.
Well, yeah, and it's not surprising at all that the ETF industry is able to adjust and adapt and find thematic investments and present them in an efficient way for investors. That's kind of the ethos of what's been going on. And as you look at the trends we're talking about here on the show and some of these IPOs and where they're positioned within the economy, the IPO ETF can certainly be there to look at the tailwind of IPOs overall that we're all discussing as a function of liquidity. It's a function of really markets that are reaching out and grabbing risk at a time when maybe they should or should not be, but the performance of IPOs are largely, in a very strong environment. There's been other times when they have not been, and in fact, investors need to be very careful when they're even investing in an ETF that's exposed to IPOs, where they're investing in these IPOs. A lot of these IPOs may have done great on day one or day two, but really underperformed for the next 3 to 9 months. Look at Moderna. Look at Uber. I mean, Uber's underperformed the S&P by 25% since it came to market. So investors really need to understand if they're investing in an ETF that gets exposure to the IPOs, how active is it, and really what is the strategy. But finding thematic ways, and so whether it's cloud or whether it's online and e-commerce or whether it's different types of online security, the ETF world, that is why ETFs are so popular, because it allows investors who can get thematic exposure, and this is a perfect time for that.
Yeah. And Deborah, I wonder if you get your thoughts on this. What's amazing to me is just catching that wave is there were SPAC ETFs have been announced now. We know SPACs are really big, alternative ways to go public this year. And sure enough, there was a SPAC ETF announced. We've had companies that are putting SPAC companies into their ETFs before deals are even completely consummated. So it seems like ETFs are becoming a sort of vehicle for quickly maneuvering ideas. We call them generically thematic ETFs. Do you see any overall trends happening in this besides the obvious fact we've got robotics and work from home and now SPAC ETF that's coming?
I think everyone in the ETF industry is quite innovative. So they're looking for ways to provide exposures that people want. So there's a lot of smart people who are trying to come up with new types of indices and new types of exposures. So yeah, I think you're totally right. I think right now there's a new filing. So there's 5 SPAC products that have been filed. So yeah, any opportunity to bring out a new idea that would be a theme for people to invest in is clearly where the industry is focused.
Yeah. And that SPAC ETF, the one that I talked about a couple of weeks ago, SPAK, not out yet, but filed but not approved. So keep an eye on that.